Now we take a look at the strong recovery in Indian stocks after near $400 billion wipeout on election results day. Indian shares recovered those losses in just 3 days. That is the fastest pace of recovery in the last decade. Since Friday, Indian stocks have hit fresh record highs in 4 of the 5 sessions. Benchmark indices hit new and intraday highs for the second consecutive day. That is on Thursday. The blue chip Sensex index closed at a new all-time high of 76,000 after hitting an intraday life high of 77,000 on Wednesday. The index hit its previous high of 77,000. Well, the broader Nifty 50 index also rose to a fresh record high of about 23,000, breaching the previous life high of 23,442 on Wednesday. Well, this week trading volume in Indian stocks climbed to a record amid a strong recovery in broader market and foreign buying. According to Bloomberg data, the 10-day moving average volume on the nation's 2 exchanges rose to $21 billion on Wednesday. This marked a jump of about 50% over the past month. To put that into context, the trading volume was in the $6 to $10 billion range since 2022 and December last year. Indian stocks got over the election shock at the fastest speed in recent history as domestic investors used the sell-off last week as an opportunity to buy the dip. The Nifty 50 index sank almost 6% on June 4th after Prime Minister Modi's alliance won a surprisingly slim majority. But the index recouped that loss in the next 3 sessions, and that's the fastest recovery from a drop of more than 5% in the last decade. Well, the previous fastest was 9 days to recover 13% loss in March 2020. Inflows into equity mutual funds hit a record $4.2 billion last month. That despite the poll-linked fluctuations which whipsawed markets in May. The flood of domestic money means any pullback has a short shelf life. This also contrasts with bearish bets by foreign investors who remain net sellers of more than $5 billion this quarter. And well, for more on this, we're now being joined by Amrish Baliga, independent market analyst, live from Mumbai. Welcome to the broadcast, sir.
Good morning.
Good morning to you. Now, markets have hit record highs repeatedly since the election results. What is your take and perhaps expectation for Indian stocks going further?
In fact, what we saw in the last few days that we, in fact, moved from a gloomy situation where people were not sure of the sort of formation the government would have. And investors were wondering about the stability of the government. We have moved from that sort of a situation to a situation where we are decently clear that Prime Minister Modi is firmly in the driver's seat. The way the government was formed, the way the ministries were distributed, clearly shows that he's in full control. And markets like continuity of policies, a stable political environment, and growth. And that's what the markets cheered in the last few days. But having said that, the valuations are still very expensive if you're looking at the small cap and the mid cap side of the market. And I think we should see a correction. But I think the crack like what we saw on June 4th may not really happen. Unless some other situation develops which you're not aware of. As of now. But then I think the markets will, hold on with some corrections in between.
Right, Mr. Baliga, you speak of how markets will hold on with some corrections in between. Just to follow up on that, the trading volume in Indian stocks surged to a record high. What is driving this euphoria?
So clearly, it's been overall we've seen positive news flows, especially post-elections. And the macro numbers also have been benign for a very long time. And more importantly, the liquidity flows. Because as long as you're making money, you tend to put in more funds into the market. And that's what the retail investors have been doing all through. And now close to about 20,000 crores is flowing in every month into the mutual funds. And that needs to be invested. So basically, it's too much of money chasing few stocks. So as long as any event does not puncture the rally, I think this virtuous cycle will continue. And the bubble which we are seeing in the mid cap and the small caps, I think that can become bigger.
Right, the latest gains have been driven by domestic investors. What is your expectation for when foreign investors are likely to return?
No, I don't think they will return anytime too soon because there are a lot of other emerging markets which are looking more attractive, at least valuation wise, than India. So FIs normally look for value as compared to momentum. So I really don't see them coming back in a hurry. And at the same time, like I said, I mean, the sort of domestic flows which are there, the Indian markets nowadays are not really dependent on the FI flows.
My last question to you, Mr. Baliga. Now, fluctuations too has jumped since last week. What does this seesaw in stocks suggest, according to you?
See, I mean, volatility was high due to conflicting news flows in the recent past, but looking at the way the government has settled down, volatility would reduce to a certain extent. And there are people who actually feel that the markets are expensive, like myself, and have been booking profits, whereas there have been a lot of people who are chasing momentum. So this volatility is going to continue, but it will be lower than what we saw recently.
Right. Thank you, Mr. Baliga, for taking our time and joining us here on WION.
Pleasure.